Good evening, everyone. My name is Paul Young. I'm just going to walk you through the closed consolidation reporting cycle. Here's a brief bio about myself. I've got close to 28 years of experience, and I cross a wide spectrum of topics and subject matter areas. Now, in business, you're seeing constant change in terms of demands, and that demand's driven by a couple of different buckets. The first bucket being the regulatory side, the rules. So every company has to go through a closed consolidation reporting cycle. Some of it's for internal because they might be a private company. Some of it also might relate to they have to follow government standards. And the other part that final is basically the regulatory side of the business, which means all the filings going to the SEC commissions for the various countries. My agenda will give you a look at the CFO's focus. I'll talk about self-reporting. I'll talk a lot about different areas of reporting, and then near the end I'll talk about potential solutions. So you'll hear the term bandied around quite a bit about real-time reporting. If you look at an accounting system in general, it's transactional reporting. And we basically then reported that at every month. What they're looking at doing is through multiple tools, because we now have mobile applications, we have financial performance solutions, that we're able to take some of that data to better report on a monthly basis. Now what that means is developing cubes and tools in order for that information to facilitate out. And that's really what's basically going on there. So the area of focus of CFO is kind of looking at how do we go to a real-time reporting model. Now, there are always going to be concerns when you do real-time reporting. As I mentioned to you, depending on how you store your transactions and how that's available. So you don't update your GL and do final reporting until the end of the month close. However, transaction data is stored on a regular basis. So this is where data warehouses come in, and looking at how you upload those data warehouses and building some sales reporting, some other projections you can take based on the stored numbers in kind of the subsidiary ledgers type of the business. Like anything else, statutory filings become more complex. XBRL is a big area of the business where the US and UK are basically making mandatory. Singapore is looking at it as well. Other countries have embraced it but not fully embraced XBRL reporting, and all that is a code that how things can be translated for SAC reporting, and that's what that means. There's different tools out to do that. Every company does a little to do it. It's just basically working with tagging of data. Now, I'm going to put it in bucket into a high-level view of where the area of focus of finance is. Accounting standards, transfer pricing, budget forecasting, like continued analysis and reporting. There's even talk about, in the past, it would take you to about 2 to 3 weeks to a month upward to a month to do the annual forecasting cycle. But that's a moment of time. And what businesses are starting to look at is, do we need to spend that much time? So what they're looking at is revisiting it and say, okay, let's condense it down to come up with a plan, but let's figure out how we can use some automation and finance together to come up with a plan in a short amount of time. Because at the same point, geopolitical events could occur, or some other stuff within the government changes in policy which make nullify that plan. Now that's the plan you committed to the board, but it'll always change. Reduce the time to close. That's still a significant amount of time. By the time that you close your GL, upload it, do all your reporting, it's still a significant amount of time. And the more you can automate those processes, the more you can focus on other aspects of the business. Risk and compliance is growing, mostly because you're seeing more pressure in cybersecurity, anything to do with e-commerce side, things to secure your assets. So that's why that's coming into play. Cash flow management. You can't run a business without cash flow, so more looking at how you assess cash flow in terms of capital investments, return on cash. Your investment side is pretty critical. Moving cost to serve models, they've been around for a while, but more and more people are looking at innovative ways of how you use technology to build out cost to serve or pricing models. Segmental reporting is growing in size. because the more and more you see the pressure of changing government policy, supply chain management dependent on a particular area, you want to really assess the segment and geography risks as part of looking at your business model. Goodwill impairment, this is another area that in the past when we changed the standard, you need to assess all acquisitions, which means using technology is part of looking at the assessment of those acquisitions is coming into play. Now, this just gives you an idea. The survey is a little old, but basically on average, companies are still struggling with the financial close periods. The worst performers in general up to 25 days to get the job done. Think of it that way. If you only got 30 days in a month, you're spending 25 of that days on your close cycle. It means less spent on other aspects of the business to drive performance. SOX compliance has been around. There's been talk about how we go forward with some of the compliance. It's still in the infancy stages, but there are other areas of reporting like Basel reporting, solvency reporting that are more unique, specific to the banking sector, but you're going to see more and more push around on the compliance side. What can be done? Well, the way you look at it is if you've got multiple systems, so you've got your ERP system, you might have another system that does tracking and all that. So you have to look at how you basically pull data together in terms of automation of the processes. That might mean creating scripts, it might be creating interfaces to do that. You might also want to look at getting away from Excel. It's not to say Excel shouldn't be used, but looking at add-ins or looking at solutions allow you to basically better automate stuff so that a lot of the rules can be done and built in background, and all you're basically doing is reporting. You want to strengthen controls. That's a big issue right now. There has been a movement to go back and expand internal audit departments, but again, it becomes down to budget and cost. So one way to look at this, to do this, is look at basically how can you automate solutions, internal audit programs, triggers, and all that as part of developing. Using a mobile application, we're just seeing a lot more sales reps using iPads or their cell phones, so we need to make sure that we have the ability to connect to those mobile apps. And constantly businesses do this. I did a lot of this work in the past, is re-engineering business processes as part of streamlining the organization when it's closing consolidation cycle or within the business in terms of your operations and marketing. What is continuous reporting? As I said, it's basically everyday transactions happen. It's taking those data, putting it into a cube structure or a data warehouse that entry point people can grab that information or reports can be bursted out. That's what that really means. Risk management, this is a growing area. You cannot go through any organization that's not assessing everything from currency to commodity to geopolitical risks to cybersecurity risk in their organization. So you'll see more and more plans. You'll also see integrated risk plans, which in other words, they take all parts of their business and integrate it into it, along with sustainable reporting, because that's a big area in terms of how you're handling your business in regards to the environment and your practices in terms of sustainability around the environment. Internal audit, this gives you an idea where the focus point is. A lot of cases in financial services and healthcare, it makes sense because of the compliance and risk area, but even on the operational side is if you've got, and I always use this analogy, but you can use any other analogy. Let's say that you're a manufacturing company that relies on a component from Thailand. Well, if Thailand goes through floods or something like that, and you know they're prone to it because of the geographic makeup of the land, then you want to assess those risks. So when you look at the component size of your business, you want to make sure you assess it. And that's where you want to get into more supply chain management models, but also assess some triggers in terms of the risk. Artificial intelligence is basically using machine language to provide outcomes. Now that means basically algorithms, and it's basically able to assess things. Now with any sort of AI, you have to make sure that it can handle the data. So it's got to be able to handle time series. It's got to also look at patterns and relationships of that data. So data sciences is all part of it. How you're going to see AI come into play is it might be allow you to look at weather patterns in terms of growth cycles. It might be able to look at weather pattern raining cycles. You might be able to overlay geopolitical risk of investing in a country that you know is going through some uncertainties with government policy. So it'll allow you to kind of do a lot more expansion of what we used to do as Monte Carlo simulations to more adding in other external factors. Now that's a brief overview of things. I work for IBM, so in general my focus is on planning and forecasting solutions, but I also have a background called close consolidation reporting. There are solutions out there where you can basically do your flash reporting, do your reporting books. Most companies have to do reporting books. You can streamline and automate all that through using tools, which means it gives you less capability to basically reduce the Excel errors, but it also allows you to streamline some of the processes and look at how you can do more real-time reporting in terms of building out your solutions. Now this example, the slide deck, isn't the only thing you will see. It just gives you an opportunity to kind of look at things. Thank you.